This is Justin Pulitzer. This is my midweek video for Wednesday, September 13th, 2023. I'm filming this Tuesday at 11:13 p.m. So we have the CPI number coming out today at 8:30 a.m. Obviously going to be a big decider. I think it's going to help determine whether the Fed hikes in November and possibly even September. We have seen a little bit of an uptick in inflation lately. We know that the PCE number had been riding up a little. We know that we've seen auto workers now pushing for higher wages on the heels of the UPS deal with the Teamsters Union. So obviously that's going to still fuel further wage growth and potentially higher prices in end products, particularly with cars, which is a big part of the durable goods. And you can see where I'm going with this. Oil is also back up huge. We're almost up close to $90 again. Pain trade seems to be higher dollar, higher interest rates, and higher oil. And that may culminate with the Fed decision. So anyhow, as far as sentiment goes, a little bit of an ease off from the prior read. A little low in the response rates lately. Twitter algorithm is just wreaking havoc with us. So please answer and be sure to retweet. But sentiment is pulling back a little. We are seeing this a little bit in the CNN gauge too, so it's not just us saying this. As far as the number that we're looking for here with CPI, if this would ever load, the problem I see is the prior reading was 0.2 and they're expecting it to be 3 times as much. It's, not so good. The prior read in terms of X food and energy is 4.7. This could be 4.3, still more than double what the Fed is, looking for, the 2% inflation rate. And if we were to go back to like the way they calculated this stuff in the 1980s, we'd be like 14% inflation. So things are not so hot. 7 days and change till the Fed decision, which kind of doesn't quite line up with the sell Rosh Hashanah by Yom Kippur, although it's pretty close. It is getting kind of closer to that. September, pretty much discounted here, but if we do get a hot number, we could see a pop up in that, and it wouldn't even take that much rate of change-wise to freak people out. And November, there's still a 40% chance that they do hike. I think if we get a hot CPI data, it's more than likely, but we'll see. 2-year over 5%, again, problematic for the bulls. We keep banging up against this now with higher lows. So, if this starts getting closer to 5.5%, 6%, you're going to see problems with PE multiple premiums. And the REITs and stuff have been just getting smashed lately, all the muni bonds. And you got to think, the last time we saw rates up this high, we had the problems with the regional banks. They still have those problems. They were able to push some of them off and, kind of delay the day of reckoning, but higher rates becomes problematic. And you got people like Jamie Dimon, saying banks aren't a good investment. And I'm sure they're going to be cutting back credit. Could have a credit event at some point if rates keep going. So over 4.25, I've told you anything over 4 is bad, but over 4.25 is still not so good in the 10-year. This is, of course, the interest rate that rules everything. Higher mortgages, higher car loans, higher credit card bills, higher everything. And this is also the number used for DCF valuation. So the larger the denominator, the lower the end product is. So keep that in mind. And I think that's why you've seen things like tech suffer lately. As far as VIX, we're kind of near the lower end of the range. A little bit of a bump up today, but, we're kind of coming into the CPI data on the lows, at channel lows. So it doesn't mean that we can't see the move still lower in terms of VIX. And often we do see that after, kind of events. But risk reward payoff wise, 3-to-1, 4-to-1, 5-to-1, more on the upside. So keep that in mind. TLT sort of stabilizing here. I still don't know that we've seen the low for the move, but we are starting to find buyers down here. I've sort of nibbled a little bit, and I would be more interested in nibbling at or below 90, somewhere between 88 and 90. But we're kind of hovering around here, so there's that. TNX, which is the 10-year represented in toss terms, is backing off channel high, but we are still above the 20 MA, and, just kind of flagging out here. Possible lower high, but we need to see it confirmed. I'd feel much more comfortable back below the 20 MA and back below the most recent swing low of 42.13, and I'm actually going to set an alert there. 42.12, I'm going to say at or below, and I'll say row long stocks. The setup in this stocks, by the way, are very easy, and I'll show you. I think people get very confused. They get lost in the sauce, but we don't. We know the levels, we know the setups, and we trade them. We did see the dollar backing off here. I will tell you, if this gets lift through 105, I don't think the market's going to like that. I think we go immediately to 105.631 to 105.788, and maybe even all the way up to 106's, 107's, which I'm pretty confident the market wouldn't like. 20 MA has been key support, so we need to really see this kind of break lower, and we'll, I guess, get a read on this post CPI. Now, if interest rates are higher after the CPI, if the dollar's higher after the CPI, if oil continues on, it's probably going to be more of sell the tech and buy the oils and, maybe push down futures. So keep that in mind. You really do need to keep an eye on this dollar, and, the higher it goes, that could be painful. I will say this, though. If they do spike it up and we keep running into the Fed decision, that could be an opportunity for a reversal point. Like a sell the news type of thing. So keep that on your radar as a potential setup. I meant to do Bitcoin. So BTC. So Bitcoin has been a lot of talk. We're still holding the 200 MA, still below the 20 MA. Nice reversal the prior day. Not much follow on the last couple days. We start to see these like one day wonders, and they don't really get much going on the follow-through side, but I would be more bullish if we could get back up over recent highs here, particularly 26,520 to 26,980. It seems like we could get a run back up, and if you're long, I guess if you're longer term, just use your 200 MA as your stop, 25,306, so roughly the 25,000 strike. Gold also kind of needs a weaker dollar. Potential issue here. Maybe you'll look below and fail. If it can get back up over the 177.70 low, could come back up maybe to the higher end of the range, 179s. But anything below 177.70 does risk still lower. So below all the major moving averages there. Again, that needs dollar weakness. Oddly enough, even with dollar strength, oil is going up, and that's because the administration continues the war on fossil fuels. They just cut back, or trying to cut back, on permitting. They canceled more permits, and they're not issuing or doing any green new permits, and I would imagine in an election year that'll be the case, as crazy as that sounds, and they never replaced the SPR. Anything over 85.41 to 84.89 still remains bullish. And the next big resistance comes in between 92.93 and 95.82, and then when you get up there, you're probably going to get people talking about 100 again. We are overbought here, and I am seeing people very excited about energy stocks here. So that pop up into this is probably one you might want to sell into, and then kind of do the time warp again, buy the dip on a pullback. But if energy keeps rallying, that's going to suck money out of tech. You will continue, I think, to see that rotation. Looking at some very weird stuff going on with SPY, and still in the Qs, and even to some other degrees in the DIA and a few other, IWM. But I had warned you, and we'll get to this in a minute. Let me do ES and NQ first, about the max pain pins being all much lower. Yesterday in my super follower video, I said you could use the Rage Extremes. And we had a bit of a look below and fail. We tried to come back up to the higher end of the range and then broke down. I think lack of buyers and people just, seeing dollar bounce and rates bounce and maybe not wanting to put on longs ahead of the CPI data, which makes sense to me. Why not wait? So anything below 44.70 to me is vulnerable. And I've even told you anything below 4,500 to 45.07 quarter to me is still vulnerable. So get back at me with looking for higher highs if we can clear 4,500. Next big supports come in 44.47.5 to 44.39.5, which is still back to the Fed 614 high of day. And then if that doesn't really hold, we could make a run down closer to the 4,400s, 44.09.5. We do have an underwater close, though, so if there is a repair, that could be 44.74 half. That's good for a scalp right or right out, back off play. Keep these numbers marked off because they will ultimately get checked back to. Same thing, liquidation break, value didn't come down with price, which is, I mean, it's not bullish, but it is less bearish as opposed to if value came down with price. Up at 15,385, which lines up with the 200 MA 15-minute. And for me, I've told you I'm a tough grader here, and I need to see price back up over and stay over 15,507.75, and at the very least 15,475 half to 15,444. Excuse me, 15,454. So this whole zone to me really needs to clear. We had talked about this zone being a key range, and we're below it all. So and we've seen resistance there again. So that I will think is resistance until it's not. If we do continue down, the 614 apples to apples Fed day range is 15,216. After that, you're looking at, levels down closer to recent lows at 15,146 half to 15,118.67, and maybe even an obscene run down closer into the high 14,000s if there's some type of a larger liquidation break, maybe a bigger spike in inflation than people were counting on. So the odd thing about SPY is every day this week the max pain pin goes lower. It goes from 447 to 443 to 440 by the end of the week. So that to me is, potential. There is potential there. I'll be a little bit of a neutral arbiter in the sense that the 20 MA and the Jackson Hole high of day are my kind of real pass, don't pass lines for being more bullish or bearish, or just being within this sort of range consolidation shop, granted from a lower high. But back below 443.90 to 445.22 zone gets a little more bearish to me. Above there is still kind of neutral, below more bearish. I'd get more increasingly bullish if we can get over the high of day from Tuesday. I was going to say today, but most of you will probably be watching this on Wednesday, so I'm going to put the alert there, and I'm going to say this would be a row long, because this to me would negate what should happen. We should, quote-unquote, go lower now to the 20 MA, and we may in the overnight. We are kind of pulling back a little bit. But if we got back up over the Tuesday high, I think we could get back up to 451s. That would make some sense to me. Below, we risk move to the 20 MA, and then if that fails, I guess we'll look at the 440s and maybe even a run down again to the 100 MA. Expected move, $5.31. And as of now, the Friday max pain pin is still at 440. I will keep you abreast of that situation if it changes after the CPI data. As far as the DIA goes, max pain pin there is 345, expected move $3.48. This did get the test of the downtrend line, so this was a little bit stronger in that regard. We are kind of in the middle of a key zone. We did reject back over the Jackson Hole high of day here, which is good. So 346.97 plus to me would be good, but I really need to see us up over this zone of 348.22 to 348.53. If we can clear there, I think the risk is still higher. Anything that gets back below 345.73 to me risks a move maybe down even to the 100 MA again. So wouldn't surprise me to see either scenario play out, but we need to see key levels cross, and the 50 MA, you can't really see it, but it is tucked in here. So this zone, the red zone, which I thought would be resistance, has been. We've had a bit of a look above and fail. It doesn't surprise me we're probing price a little bit lower, but that must clear for still higher prices. I was looking at Boeing, finally got the 200 MA right or right out play. That was a good intraday trade if you took it, but it's got to hold. So if you're long, don't let it get below the 200 MA on you, because it could have a quick forward and maybe even $20 lower. So keep that in mind. 188 was a very big breakout area. 208.54, so that's the must hold. Caterpillar, it's another Dow stock. I think is a short if it breaks the 20 MA. Until then, to me, it's just kind of sideways chop. But as of now, still holding 277.77 at the moment. URI, I think, could be a short if you want to try it here, right or right out below the 50 MA. You saw the last time this got gonged after 310. They did try to kind of hold it, but it went. So if you want to use high of day here as a stop, 465.01, that's fine, or 50 MA is fine too. It's a little tight though at 461.84. I'd probably use the high of day if you're trying that as a right or right out short. So we'll see. IWM expected move $2.77. The max pain pin there is 186. So that would be, oddly enough, a little bit higher here. This to me just looks really choppy. I don't really see much of an edge here. We had talked about this maybe getting channel high and breaking. It broke the 50 MA, so it was a short. Probably 200 MA has been the key support. So somewhere between 183s and 181s is the most recent support. I'd be more interested in kind of buying the dip down closer to 173s, maybe 175s if it had another leg lower. But as of here, to me, this just looks very choppy. They tried to probe it higher. It didn't really take. So far, just looking chop. Qs, again, another one with very odd pinning numbers. It goes from 373 to 375, but then down to 360 by the end of the week with a $6.03 expected move. So 360 would be a lot lower. So what now? Well, we've been pretty clear about this. Bulls can be long as this is above 375.66. And I would say anything below the Jackson Hole high of day at 372.74 to, I guess, 371.83 would be more of a short. If you want to use 371.35 here, like basically we got the 61.8. We're pulling back to the 50% fit, but even this looked over it. I'm not looking at this 78.6. I'm looking at this 61.8 of the most recent range. So there is a potential for a pullback to the 20 MA here if the 50 MA fails, which is down at 369.42. So I'll keep it simple. I'm going to put an alert here over 375.66, and if it does, I'll say row long. But until then, I think it's sideways to lower. That's the risk there. I mean, could we bounce back up to it? Sure, but it needs to clear. SMH, kind of not looking so hot, really riding the channel low here and consolidating down here. I guess 152.26 is the 50% fib of the entire range. So if you want to be kind of strict, you could use that as the key for if you could clear there. There's a long. I have it at the lower high here at 151.66 as a opportunity to cover shorts and then to put on long if it clears. But if you can clear the 2-day highs, I do think the risk is back up. But anything inside there to me is just sideways with liquidation risk potential. NVDA, we know we have some insider sales. We know that there's people thinking that there's some kind of crazy Ponzi scheme going on with those chips. I'm not so convinced on that just yet, but I do know we're below the 20 MA, and for momentum, you got to be over that, and that's 463.61. We're hanging around the 50 MA, but maybe I'd get interested if we pulled back closer to recent lows and the 100 MA, but here I'd feel better if it were over the 20 MA, which it's not, so careful. Qualcomm still holding. They did try to pull it back this morning, but I think if you want to play this long with, I'm cool with doing some kind of call spread for a move back up, maybe into the 120s. They got the Apple business again, which was shocking because I think everyone thought Apple was just going to go straight to their own chips, but they did re-up with Qualcomm. Intel into some resistance here. I'd be a seller into Pops. Maybe it gets some kind of an outside moves to 42, 43s. Maybe 43.61 is the higher end, but this to me, the gap fill in the 50% fib area was a good zone to sell into, and if it does keep going to the channel high, you might even want to try a right or right out short play. Seems like that got a little bit of catch up. Makes sense. So the Apple event, I pre-ordered my phone. I get a new one pretty much every year these days. I got the 15 Pro. I got it in the new titanium color, I think it's natural or whatever. I got this Taurus case. I posted about it, and I ordered my screen protector, so I'll have that on launch day. I'll let you know what I think. I didn't get the Max. I was going to because of the 5x zoom. I was pretty sure I was going to get it, but then, you know, I do a lot of one-handed texting, mainly in situations when you're not supposed to be texting. I'll just leave it at that. And it's the big phone is very hard to hold. It's also heavier, and when I walk, I carry it in my back pocket, and it feels always, the big phone always feels to me like it's going to fall out. So for me, the smaller size was better, and I'll just be content with the better low light, you know, enhanced resolution there. That's a big thing, and I think there were a lot of incremental. Look, at this point, you know, the iPhones are getting incremental changes. Same thing with the action cameras and so on and so forth. The technology has come so far, but for me, the big thing was, yeah, the ProRes and how you can offload it, and, you know, the 5x zoom and all that. But I think the big thing that no one was really talking about was the gaming. That they're going to now be able to play console level games on the iPhone. And now is your iPhone a little portable gaming console with, you know, Bluetooth connectivity to screens, or that new, I forget, the VR headset? That could be something. You know, gaming, don't sleep on gaming. That's a big thing. And that to me actually stood out. Once I heard that, I was sort of like dozing off a little during the gaming, because I don't really game as much as I used to, and if I do, I'm sort of nostalgic to my retro games. I did have a brief stint with the Xbox and, you know, all that Call of Duty stuff, but I mostly play, you know, the old NES and Super NES and Genesis games and stuff, if I even have time. I have all those retro consoles, you know, the remakes or whatever. But yeah, I think that's a big thing. I think Apple gaming to me is like a big thing. I don't know why they haven't. I mean, they are pushing it, but that could be a big revenue maker, and I think a lot of people kind of missed out on that. But I do think that the phones were, you know, incrementally good. You know, not a super exciting cycle, but I do think that there was enough in all of the phones that I think that the upgrades this year are actually somewhat worthwhile. If you're going to just do the regular 15, you might even want to consider just doing the 14 Pro, because you get some better RAM there. But yeah, and the better, you know, zooming options. But I think the 15 Pro is they're great phones, and they do really great photography. I think if you have a phone that's 13 or 14, you don't necessarily have to do the upgrade. But if you're in like a 10, 11, or 12, you probably 12 maybe not, but that's like the vestibule for me if you want to do the upgrade. You know, if you're sort of on the fence and you're debating if you need to do it, I would probably do 12 or older. For sure the 11. I'd never liked the 11. I thought it was a very glitchy phone. I think the 10 is outdated at this point. But the 13 and 14 were pretty solid phones with pretty solid camera specs. So if you don't, you know, need to do the upgrade, you want to save some coin, I think that's okay. And look, you're taking it from someone who's had every one of these phones, so I can tell you. As far as Apple stock goes, it's below the 20 MA, which is now potential resistance. It had been support, and I have an alert over the high of day. If it clears, I'd play long. If not, I think you could be short against that. If you want to lower your stop, 177.35, I'm cool with that. You know, don't let it get much above there on you. If it filled the gap down to 165s in the 200 MA, I'd probably start selling some 157 or below strike puts, maybe 150. The problem for me with Apple, and I'll show you, is the juice. It's not really there. 25 to 26 is kind of like fair value, and it's just not really there, with the exception of, like, you know, just some, you know, most recent chains, and there's not going to be a lot of juice there. So for me, it's pure directional play at this point if you want to play Apple. But below 20 MA, I don't necessarily think you need to be long or not. Tesla, we talked about it in the weekend video. They did get that upgrade from Morgan Stanley, and we had talked about a gap and go over the 50 MA, likely getting up to 280, and we stalled just short of there, and it's pulling back. Keep it simple. The 62.8 of the range. I'm sorry, 61.8 of the range is 266.08. I'm like, what are you saying? 62.8. I'm like, did he just make something up? Yeah, that needs to hold. If that doesn't hold, I think you can pull back to the 255 area, which is the 50 MA and kind of this breakout point. So very key here. If you can clear 280, then, which was the, trend resistance, maybe we get that gap fill up here closer to 290s. But that's it. 61.8 plus, I think you'd be long. Below, stop or short. And, hopefully you did book some profits near the highs today. Amazon's had a lot of relative strength lately, but look where it stalled into, right? Where it kind of broke down from. So you have a little bit of a dubstep setup here. If you want to have a raised stop, 140.61 to me makes sense. If you want a quick long trade over 143, makes some sense to me. The more days it consolidates here, the better that setup becomes in either direction. Obviously, people get excited with this for Black Friday, and they said they had the best Prime Day that they ever had. So just gonna matter with what the consumer does. A little bit of a rollover in Microsoft here. The bulls do need to hold 335.14 plus. If not, we could pull back to the 20 MA at 326 and maybe even the channel low. This is going to depend on tech and the dollar and the NASDAQ. If the NASDAQ does pin at 360, Microsoft's probably going to be down. I'm just going to be real with you. Same thing with Apple and all of this stuff. So, keep it simple. Adobe, also software of a service, got nailed today. Anything below, we had talked about 552.14, I thought was a stop out. 20 MA and 50 MA are now key supports at 537.69. These numbers, they got to start splitting these stocks. They're so freaking high again. 524.91. The real breakout was 519.60, so that could be an interesting spot to me. But I just don't see the need to be long here over or below 552.14. And if you want to be short, you could use that as your spot. Intuit JP Fave starting to roll over a little. We had talked about booking profits up here. They did buy it back up, but 20 MA is the backside of the old channel, and that's usually the first test after a channel breakout is a buy. So I would try that right out at 522.41 or wherever it is at the time. The 50 MA could also offer up some support, but I do like booking profits up here in Intuit, even if it does go a little bit higher. Google, a little weakness. It is up near resistance, which we had talked about. Still has a pretty good chart. It's consolidating. I'm just hoping they pull this thing back hard to buy the dip closer to 126, maybe sell 120 puts at that point or below. But it just looks like it's consolidating up here. Google is Google. Netflix, I kind of got to that today a little too. It is still above the 431.85 to 423.21 zone, which is sort of okay, but we did stall a channel high, and this is where we had said to sell into, so I don't necessarily know that you need to buy it right back. Maybe wait for a little bit lower, but you did get a little test into the to the void again, and if it clears again, maybe that would interest me. I'm going to put an alert over. I guess you could either do high of day, or I'm not really looking to do this trade, so they kind of have to drag me into it. Just when I thought I was out, they pulled me back in. Row long, if it gets into the gap up here again, maybe I would do the high of day. I'll put an alert 445.44, so 45, so 445. I always love those 445.45. And I'll say tester size long. You could make of that what you will, but money flow is starting to roll over a little here, so I do think caution is key. Disney, I told you all the TV traders hated it. It's now getting closer to some resistance. If you took the long down there, probably want to start looking to book some profits between 84s and 86s. Makes some sense to me. This is where it kind of really broke down from, so another up day or so could be an opportunity to book some profits, although I do think that the Charter deal was good for them. And even if they're offering Disney Plus to cable subscribers at a bit of a discount, they're adding to their subscriber base. So that's smart, I think. They've been struggling in that regard, and I don't know. Their sports ticket is expensive. Look, I just cut my cable, so I don't really watch TV besides, financial news and Fox News, and I didn't need to pay it. Just Netflix, Prime, and maybe HBO Max. That's sort of it for me. And Paramount this month for Billions, and Star Trek Picard, which was a great third season, by the way. The first two weren't so good. The third season was good. PayPal. Kramer now hates it. We have a possible higher low, and we're over the 20 MA. I don't think it's going to set the world on fire, but could it get back up to the 50 MA or maybe even just 64s, 65s? That's where I'm looking for. I had been short for earnings, as a lot of you know. I covered it probably a little too early on day 2 or so, but I had told you, most of the bang was here, and, sometimes history doesn't repeat, but it did. But we finished it up down here. Look below and fail. It was a good opportunity to reverse long, and I do have a small amount of short puts on in the trade, so I've played this both long and short. Remember, we had got out near the gap fill, actually, right before the badness really happened. So we traded this pretty well. I'd say I got hand in PayPal. It was a good Seinfeld episode too. Got hand. Booking. 20 MA above. We're above the downtrend. Still looks all right to me. They are benefiting a lot from people traveling. I wonder how, with the airline prices going up, they are super expensive. Everyone I know, though, was in Europe, in Italy. It seems like Italy and Greece get a lot of people. And, people were traveling. They've been locked up for a few years, and people like to travel. But I guess just, have a stop. Airbnb, they got added to the S&P. We got into the resistance area. It's pulling back a little. I still like trimming up here. I'd get careful if it starts stalling back below 144.26 to 144.63. As long as that area holds, it's fine. Below there, not so good. Blackstone also was its kind of kissing cousin getting added. Do we have a secure high in Blackstone here? You could get a pullback to the breakout at 108s and it kind of still be okay, but I like trimming up here. We had some reference highs. It looks like it overshot a little. It's a little overbought in the money flow, and the new high didn't confirm with the new money flow high, so I'd probably trim some Blackstone here if you're long. Chipotle. I haven't eaten there in a while. The last time I ate there was like many, many months ago, may even be a year ago. I got sick there from the quesadilla. I just did not feel good after it. But I had really been eating there a lot before that, and I stopped. So ran into resistance at 1975s. If you want to be long against the 20 MA, that's cool. 1905-ish. But don't be long below maybe the channel in the 20 MA. This is, it's riding kind of the channel low here. It's got to hold. It looks to me like the better setup, though, is long over the 50 MA or short below the 20 MA. See, I have that written in here. So if you can clear what was resistance or break what could be support, then I'd get more interested in a directional play as a go with above the 50 MA at 1966.54 or short below 1905.03, and I can't even believe that that's what the price of Chipotle is. I did get along a little fizzer via some short puttage. I do worry that this will be a liquidation into the end of the year, so I'm not getting too sizable, but you do have two back-to-back hammers. It's got a 4.8% dividend. If you sell some puts, you're yielding over 5%, and you aren't buying it near the highs for sure. You're low near the money flow. Look, if you can hold this for a few years, I think you'll be fine. It's sort of a longer-term play, and I do like starting to nibble, particularly into dumps. DraftKings. Let's end on DraftKings. I've been liking these shorter videos lately, particularly for the midweek videos. Gap fill was my target. I think the person who asked this, I told them that, and here we are, pulling back. It's kind of got to hold this 30.51, or it could be a short, maybe even all the way down to the 20 MA or below. So if you didn't book profits here, hope for a pop in the morning to do so. If you want to be short, I guess you could use the gap fill level, 31.71. It's a little above the candle body high. I don't think you need to stand on ceremony and wait for 32.14 plus. But to me, it looks like the easy money in that trade has been had. CPI data is at 8:30 a.m. And if the dollar starts rallying, if rates start rallying, if oil starts rallying, it's probably going to be pressure on the markets outside of oil stocks. But if you can get a reversal in the dollar, which is lower, and rates start coming in, and oil maybe starts pulling back, or even just if the first two happen, then maybe you get a rotation back into some of the tech. Do keep in mind the max pain pins are lower, and we are in seasonal weakness. It's always the sell Rosh Hashanah, which, by the way, starts on the 15th, and by Yom Kippur, which ends on the 25th. So we are coming into the kind of September seasonal weakness doldrums. See you for the weekend video, late night Friday or early morning Saturday. Please like and retweet the video. Cheers.